The markets continue their fall, with the S&P TSX falling 2.3% on the day, making it a month loss of about 9%. This brings the TSX down to a new low and questions whether or not the recovery is going to happen sooner or we're entering the next recession. As many things are being closed down, schools in France, as well as a lot of flights are getting cancelled. The sectors that fell most on the TSX are the energy, healthcare, and information technology. The S&P 500 didn't have quite as a rough day, but still fell 1.7%. On the week though, it is slightly up, showing that this isn't quite at the bottom. It could continue to fall though over the next week. The Dow also wasn't down quite as much, only falling about 1%. On the week though, it is having decently up, being up 1.8%, though on the month it has that staggering drop of 12%. The Nasdaq performed similar to the S&P 500, falling 1.85%, making a month loss of over 10%. In Europe, the FTSE dropped 3.62% and the Nikkei dropped 2.72%. Oil took a tumble today, with the WTI falling 10.26% and Brent falling 9.5%. A lot of that has to do with the OPEC Plus deal not going through. As I said earlier, they wanted to decrease their level of output by 1.5 million barrels per day, but they still had to get approval from the meeting. And Russia and Saudi Arabia both came out against it, and they're both the biggest players in the market. So overall, that's the main reason for the drop. Gold, on the other hand, had a decent day, going up 53 basis points, hitting that 1677 mark. With money moving away from stocks, they continue to go into the treasury markets as yields continue to drop. I'm actually pretty surprised by how far they've dropped, and as the US 10-year dropped 22 basis points today, it's currently at 74 basis points, as it's hard to say when it'll continue to drop. You can see too, the 12 months is at 42 basis points, 2 years at 51. Canada as well, the rates continue to fall as the 10 years down equally at 74 basis points. If you look at the Canada yield curve, it does look pretty messed up. Hard to say what's going to go on in the treasury market going forward. In the currency markets, the Japanese yen again increased today, as well as the euro. Both those currencies seems to be doing strong, though a lot of it probably has to do with how interest rates work, as both of them haven't cut their interest rates. Canada and US had another rough day, as in part, I believe that probably also has to do with the interest rates being dropped by the central banks there. The US housing market continues to perform strongly, with payrolls rising 273,000 from a month ago. January's was also revised to 273,000 gain. On average for this month, they expected a gain of 175,000. Unemployment rate fell to a low of 3.5%, and hourly earnings increased by 3%. On the month, though, they increased 0.3%. The strong job market growth continues to show that they're having strong economic growth in the US and could hold out on that theory of a recession coming. But at the same time, this could be the tipping point, as it's hard to say what impact is going to happen in the US, especially now that it's actually hitting the US. In total, though, the government had a 45,000 job increase and construction a 42,000 increase. Overall, though, the weakness comes from retailers and wholesalers. Canada's employment numbers came back as well, having a strong month in February, as they reported a net gain of 30,300, although unemployment did rise to 5.6%. This is strong, though, as they only expected a 10,000 job gain in February. Overall, increase in wages rose 4.3% for permanent employees. Overall, pretty strong month for both the US and Canada, and hopefully this shows that things are going to remain strong. On the other hand, though, Canada's trade deficit did take a hit as it rose to 1.47 billion in January. This is a result of lower exports on motor vehicles, which fell 4.1%. They expected only an 830 million deficit, so there's a pretty substantial change from expectations. On total, the value of exports fell 2%, and imports dropped 0.5%. A lot of this is because of what's going on in China and things that are shut down, as Chinese exports fell 7.8% and imports from China fell 12.1%. In Germany, factory orders had a strong month as they were up 5.5% compared to the previous month. This is a good rebound for them as the past 2 months orders have been down. Overall, they were up 15.1% because of an increase in demand from Europe. Orders from other countries were up 7.8% as Germany's declined 1.3% from inside. I found this news to be kind of interesting, not going to have the significant impact, but overall just things that are going on. In Canada, the Innovation, Science and Industry Minister is telling the cell phone companies in Canada that they have to cut their mid-range data plans by 25% in the next 2 years. So that's within the range of 2 gigs to 6 gigs. Overall, Canada does have pretty high data prices. I think a lot of that reason is because there's so much area and everything's quite spread out, as well as the issues with companies that are trying to enter the market. As there have been some US companies that have tried to enter Canada, but have been kind of fought off by the Canadian companies in the CRTC. Overall, it seems a little strange way to go about it, especially when you consider you could just increase competition, but I guess this is just what the Liberal government wants to do, as this was one of their pledges in the last election. In company news, Costco wholesaler had their earnings reports. They reported a strong revenue of 39 billion, up from 35 billion the previous year, which beat analysts' expectations of 38 billion. Overall, net income was also up at 931 million, up from 881 million. That gives them an earnings per share of 210, up from 201 the previous year. In total, comparable sales rose 11.7% in February as the virus impacted how much people were buying, as they expected 3% of that is coming from the coronavirus. All in all, a decent quarter for the Costco as that market continues to perform well. Walmart did well, Target did pretty good, while things like malls and other retail stores have been more on the struggling side. Unfortunately, the stock is down on the day, but as are all stocks pretty much down on the day, it's basically in line with the market.